Are you guys tired of missing out on optimal trade entries? Or not even being in the trade to begin with as it's going in your favor? If that sounds like you definitely want to stick around and watch the entire video as I'm about to give you guys some free game on accumulation and distribution and how you can use these two concepts to change your whole trading trajectory. If you clicked on this video, you definitely want to learn more about accumulation and distribution and how it can help you. So to briefly explain this, let me just put this in simple words. Distribution happens right before the sell-off, and accumulation happens right before the buying. Essentially, what's going on is artificial intelligence is delivering price from one price level to another. Once it reaches that certain price level, it then starts to either 1, distribute, or 2, accumulate. In a selling example, when it distributes, what that means is artificial intelligence is buying price up to that price level. Once it reaches that price level, it has to distribute orders so that way it can then put in more selling orders to create more selling pressure in the market. Vice versa, in a buying example, price sells down to a premium price level so that way it can then accumulate orders and then start creating more buying pressure to push up the market. But let me let you in on a little secret. Right before the sell-off happens and the buying happens, there's a very consistent and similar pattern that you can see every single time in the lower time frames. And that's exactly what I'm about to show you guys. So without further ado, let's get straight into the charts and show you guys some examples that happened this week. All right, guys, if you guys made it this far, definitely leave a like on this video and subscribe if you're new. All right, guys, so like I mentioned before, whenever you're looking to sell, there's always going to be a similar and consistent pattern. What we have right here on the chart is a picture perfect example of what distribution looks like. Price is going to start by making a higher high, higher low, higher high, higher low, higher high. It'll stop the buying and then it'll break structure, selling price below this current higher low, giving you first signs that it's willing to shift in the opposite direction. Once it does this, automatically you want to look at the last up move. This last up move is going to be where your focus should be on, because as price starts to shift, it'll then retrace back into these orders and mitigate from here and start to sell even more, creating more lower lows and lower highs. Vice versa with accumulation, price goes lower low, lower high, lower low, lower high, lower low, and instead of making a new lower high, it'll then break the current lower high and make a new high. This break of structure, closing above the current lower high in the market, is the first sign that price is willing to shift from a bearish market to a bullish market. This first sign is important, but it's not going to be where you take the entry. This is going to be a break and then a retracement into the last down move. When price retraces down into the last down move, you want to put your stop loss below here and you want to buy it at a lower premium discount within this range from the lower low to this high. Whenever price retraces back up into the current lower high in the market and then makes a new lower low, you can always look at this new current lower high created and wait for price to retrace back in there and take another entry. Your initial entry could be here and then your second entry could be right here. Just like with accumulation, when price closes above the current lower high and retraces back into that last down move, once it's starting to respect it, you can definitely buy it, and when it closes making a new higher high, you can wait for that second re-entry as price starts to retrace to the current higher low in the market. Now moving forward, we're going to go into an example. So right here, you can see in the 4-hour time frame, we have signs of distribution. Price goes lower low, lower low, and then a new higher high with price closing above the current lower high. As price starts to retrace, you get signs within here in the smaller time frame that it's willing to go higher. So what we're going to do is we're going to put a box right here so that way we can get an idea of what we're looking at in the smaller time frame when it comes to this 4-hour retracement. Going straight into the 15-minute, as we see right here, price is making a lower low, lower high, lower low, and then it closes above this current lower high. After the break of structure, when price retraces back down into the last overall down move, it then gives you a second break of structure, creating a new higher high. Price then retraces one last time into the last down move, and then it takes off. From when price accumulated to where it is now, there's been about 521 points that you could have gained within the last 2 trading days. So again, just to show you in a picture perfect example of what I see here, price went lower low, lower high, lower low, close above, retracement, new break of structure, one last retracement, and then expansion to the upside. Now with this same area, we're going to go and look at a selling opportunity. Now we look at the 4-hour time frame. We're going based off structure. Me understanding structure in the 4-hour, we went lower low, lower high, lower low, price made a new high. Whenever price makes a new high, I'm anticipating for price in the smaller time frame to distribute to make that retracement back down to some orders and imbalances in that trading range. Now looking at this area in the 15-minute, right where I shaded that 4-hour higher high, we see price distribute. Price goes higher high, higher low, higher high, lower low, retraces back into this area. Price goes higher high, higher low, higher high, lower low. Distribution. Price distributes. Once price makes a new lower low in the market, it then retraces back up into the last down move, and from here it expands to the downside. From this point where you could have entered to this point where you could have exited, this was a 248 point move in one day. One thing that I did want to mention is that you gotta pay attention to when this is happening. Look at the time that this is happening. It's in similar times, similar patterns, right? Overall the same thing, but just vice versa. Whenever you're looking to sell, you're looking at this option. And when you're looking to buy, you're looking at this option. All right, guys, that's going to conclude today's video. Very short and sweet. Wanted to give you guys some free, valuable game. If you guys found this helpful, definitely share it with somebody that's also in the beginning stages of their day trading journey. And don't forget to do all the above. Like, comment, subscribe, and turn on post notifications so that way you never miss another upload. I'll see you guys on the next video. Peace.